days, 181 days, and 364 days. But total subscription was 1.76 trillion naira, higher than 1.23 trillion naira staked on previous auction. With the huge oversubscriptions, the DMO allotted more NTBS across the tenors, reckoning a total of 604.36 billion naira. The government had also outlined policy measures to reduce debt finance and rejig non-debt revenue in 2024. Meanwhile, Minister of Finance and Coordinator Minister for the Economy, Wale Edu, said the federal government was certain that Nigeria's economy and its debt profile would not require any dire straits measures from international lenders. Edu spoke against the background of Nigeria's national debt currently at more than 87 trillion naira and concerns that shortfalls in revenue could further worsen government's financial sustainability. He said the overall outlook of the economic potential and the reforms by the government gives a strong assurance that Nigeria will not fall into any likelihood of seeking international assistance on debt restructuring, such as the International Monetary Fund. The minister added that the government is implementing a reform package in the form of strong fiscal policies that promote fiscal discipline, effective debt management, and prudent borrowing practices. According to him, the government will combine a variety of fiscal, economic, and accounting strategies to reduce the country's budget deficit by nearly half in a major move aimed at blocking leakages and redirecting financing to long-term economic growth. Edu outlined the comprehensive strategy that will underpin the implementation of the 2024 budget with the overall aims of reducing deficits, enhancing revenue, and locking in significant values into expenditures, noting that there is need to realign revenue and expenditure management to deliver optimal value for money. In line with its commitment to further deepen financial literacy and increase the participation of retail investors in the capital market, Nigerian Exchange, in collaboration with Zenith Bank and Africa Prudential, took its financial literacy initiative X-Lit to the Army barracks. Several soldiers were awarded shares in quoted companies as part of savings and investment enlightenment campaign aimed at encouraging military men to plan ahead of retirement. The session tagged Soldier's Wealth X-Lit's exclusive insight for the Nigerian military took place at the Nigerian Armed Forces Resettlement Center. The soldiers commended NGX, African Prudential, and Zenith Bank for organizing this session, saying it came at appropriate time. They were preparing for retirement. Divisional Head Business Support Services and General Counsel, Nigerian Exchange NGX, Dr. Irene Robinson Anyawale, said NGX launched the X-Lit initiative to bring the market closer to retail investors, on which retiring military officers formed part of. Increase in customs exchange rate from 783 naira to 952 naira per dollar by the Central Bank of Nigeria would worsen production and operating costs for businesses in the country. Chief Executive Officer Central for the Promotion of Private Enterprises, Dr. Muda Yusuf, said the increase would inflict more pains on the citizens, erode profit margins, reduce purchasing power, and put the survival of businesses at an elevated risk. According to him, the frequent changes in rates is creating serious issues of uncertainty for investors and making the international trade process increasingly unpredictable. Yusuf noted that businesses were already contending with an incredibly difficult operating environment arising from severe macroeconomic headwinds. According to him, the CBN should allow for a concessionary rate for the competition of import duty to protect the economy and the citizens from the reality of unbearable inflationary pressures. He said the increase will worsen the poverty situation and the welfare conditions of the citizens, heighten corruption vulnerabilities in the international trade ecosystem, and increase influx of substandard products amid high and increasing costs of products. African equities are the best returning stocks globally, with average return with the continent more than a double of returns in several other markets. Global stock data tracked by the nation's market intelligence stated that African stock markets are showing considerable resilience than other markets, with 3 of the continent's 5 largest markets in the world's top 5 best returns charts. Egypt, Nigeria, and Ghana were among the top 5 global returns, with Egypt scaling up to global leadership with average return of 69.1%. In Africa, South Africa's FTSE/JSE recorded modest return of 0.9%, while Kenya's NSE 20 index posted the lowest return of -0.7%, while Mauritius Semedes index recorded a marginal decline of -0.1%. Many thanks for watching our business news. My name is Helen Eric J. Miliwai, bearing business with Foreign Titbits rather. Good afternoon.